Good morning, ladies and gentlemen. My name is Tom Farrell. I'm a business law attorney. My practice is targeted specifically to the owners of small and medium-sized businesses. I've been practicing law for over 25 years. Most of my career I spent working for other people, either law firms or as in-house counsel to big companies, big corporations. But 6 years ago, the company I was working for had a nasty surprise in its supply chain. This is well before the pandemic. And the company was in bankruptcy proceedings less than 2 years later. And I find myself looking for a position. And so I wound up hanging out my own shingle and practicing myself, which also meant that I was a small business owner all of a sudden. And so I faced many of the same hurdles and questions and issues that you folks are facing or are going to face in the near future. When I say we and us, it's because in addition to, because I'm a lawyer with a solo practice, I'm a small business owner too. It has been my pleasure to work with the SBDCs in various places. This is the first time with Stony Brook, but I've presented before for the SBDC at Farmingdale, at York College in Jamaica, and at LaGuardia Community College in Astoria in Queens. It has been my experience that the people that work in these organizations are routinely extraordinarily well-informed, passionate about what they do, really eager to help the owners of small and medium-sized businesses. And as Willa mentioned, they have access to a vast array of information and resources. So I urge you to become frequent visitors to the SBDC nearest you. And it is my pleasure to be affiliated with them. I'll have my contact information up at the end of the presentation if you want to follow up with a question or something afterwards. Today, as Willa mentioned, we're going to talk about the differences between an independent contractor and an employee. It has come up in the spotlight recently, as Willa said, because of the pandemic, which was also accompanied by an explosion in the growth of the gig economy. And so it is an important issue for business owners. And also, by the way, if you get this wrong, it can wind up costing a lot of money and also some administrative headaches. So there are two different aspects of the classification issue, because in addition to worrying about whether you have a worker who's an employee or an independent contractor, you sometimes have to worry about whether your employee is entitled to overtime or not. So generally speaking, the workers you hire are either independent contractors or employees, and there are differences we're going to get to in a second. That determination is made either by the Internal Revenue Service or New York State, the New York State Department of Taxation and Finance. Generally speaking, New York State agrees with whatever determination the Internal Revenue Service makes. It's very rare that they disagree. If a worker is an employee, the employer is responsible for withholding state and federal income tax, the employee's portion of Social Security and Medicare tax, and other various withholdings, including the federal unemployment tax, FICA, et cetera, et cetera. But those withholdings are only made for employees, not independent contractors. So there's kind of an incentive, unfortunately, for small business owners to classify workers as independent contractors, because then they don't have to worry about those costs and administrative work, the payroll or those deductions, et cetera, et cetera. Basically, an employee is an individual who performs services and is subject to the employer's control about how and when the work is going to be done. An independent contractor has a lot less control because the services are performed how the independent contractor sees fit, and the owner or employer is only concerned with the result. And we're going to be coming back to this control issue repeatedly today because it's so important. I tell my clients to think of this as a kind of continuum, okay? The amount of control works like this. The more control you exercise over the worker, the more likely it is that that person is your employee. And conversely, the less control you exercise, the more likely it is that the person is an independent contractor. So now the question becomes, what kind of control are we talking about, okay? And the IRS has over the years determined that there are three kinds of evidence to talk about when we talk about control: behavioral, financial, and the type of relationship between the parties, okay? Behavioral control consists largely of instruction. how much you are instructing your workers and what you're telling them to do, when, where, and how to get work, what tools to use, where to get your supplies, what work gets done by this guy and this gets done by this person or this group, and importantly too, sometimes, especially in construction, what order the work gets done in. Okay, if you're using employees, a lot of that instruction is given, and sometimes it's given on a regular basis. We didn't talk about, for example, health and safety training, and that gets done on a regular basis. When you have a group of people that are getting this kind of instruction, detailed and regular, they're almost certainly employees. And another aspect of behavioral control is this business of evaluation systems, the quarterly reviews, the annual reviews, et cetera, et cetera. And by the way, as it says here, it's whether the business exercises or whether the business owner retains the right to control, not whether or not the business owner actually does. So for example, in the employee handbook, there may be 2 or 3 policies laid out in an employee handbook that allow the business owner to discipline workers under certain circumstances, change policies, et cetera, et cetera. It's not about what the business owner actually does. It's about what the business owner reserves the right to do. Because the more of those rights the business owner reserves with respect to the workers, the more likely it is that those workers are employees. Second category is financial control. Now, this is I don't want to say backwards, but contrasting, okay? When we spoke a minute ago about training, that was, showing what an employee looks like. Here, when the IRS and New York State talk about financial control, they talk about what an independent contractor looks like, okay? So an independent contractor makes a significant investment in his or her business. That can include the cost of a startup corporation or LLC. It can include the expenses that are associated with a commercial lease, insurance, et cetera, et cetera. If you are an employee, you're working for somebody, you don't have to worry about that stuff. But if you've got an independent contracting business, you do. That's your responsibility, that investment, okay? One notable exception here. It is not uncommon in the construction industry for an employee to build up a collection of tools specific to his or her work over the course of years in the construction industry. And even though that's kind of an investment, that is not considered to be a hallmark of an independent contractor. It's just something that is peculiar to employees in the construction industry. So first, there's significant investment. Second, independent contractors have unreimbursed expenses. If they are buying PPE, such as steel-toed boots, hard hats, particular kinds of gloves that are needed, the independent contractor pays for that himself or herself and is not reimbursed. An employee, if they have to lay out for that material, is reimbursed. So that's one of the differences. This is one of the big ones, ladies and gentlemen, the opportunity for profit or loss. If you are an employee, it does not matter to you whether the company is making a lot of money or just a little, whether the company is profitable or not profitable. If you're an employee, you get your paycheck every week, and the profit and loss part doesn't enter into the equation. If you are a legitimate independent contractor, though, profit and loss is very important because that's how you make your living. The opportunity for profit and loss is something that is controlled by the independent contractor because it's the independent contractor that's going to set the prices for his or her services. And so the independent contractor has to be aware of what his or her costs are going to be, what the expenses are going to be, and build in that profit margin accordingly. So the opportunity for profit or loss is a significant difference between an employee and an independent contractor. And the next factor is connected to that because a true independent contractor is making their services available to the entire market, not just working for the same business owner day after day, week after week, year after year. An independent contractor has his or her own business and does not, well, it may rely on 1 or 2 customers that are large repeat customers, but still they're supplying services to other people, other business owners in the same industry. They are making the services available on a wide scale, not just to one person. That's another significant difference between an employee and an independent contractor. Okay, now this third category of behavior is kind of the catch-all category, whatever doesn't fit into the other two, where the IRS looks at the type of relationship between the worker and the business, okay? First, if there's a written contract, that's an indication of the relationship, but it's one of the rare instances where the written contract is not the final word. Because if a business owner has a worker that really should be classified as an employee, then having a contract that calls that person an independent contractor is not going to help. You can call somebody an independent contractor in writing till the cows come home, but if the analysis says that person is an employee, the contract isn't going to change that. Many independent contractors want a written contract anyway because they want to specify the exact nature of the services that they are providing and what they're going to get paid for it. So a good, solidly written independent contractor agreement can help, but it is not the final word. One of the more important aspects about the type of relationship, these middle two are really the most important. The employee type benefits that are provided, okay? Things like the New York State Paid Family Leave Act, which allows employers to take paid time off to bond with a newborn child or an adoption, a child placed with them for adoption. It allows workers to take time off if somebody in their immediate family has a significant illness and they need to be tended to. These are benefits that are provided to employees, not independent contractors. So the more, and employee type benefits includes obviously healthcare insurance, paid time off, accrued paid vacation time, et cetera, et cetera. The more of those kinds of benefits that you as the business owner are providing to your workers, the more likely it is that they are employees, taken, in context with the whole picture. But independent contractors don't get those kind of benefits. So it really does indicate an employee relationship. Now, relationship permanency is just a fancy way of saying how long is the person going to be around? What does it look like the person is being hired for, short-term or long-term, okay? Obviously, the shorter the worker is going to be around, the more likely it is that worker is an independent contractor, because you don't want to hire somebody to manage your second shift workers and then have to replace him or her 6 weeks later or even 6 months later. You want somebody that's going to be there for the long haul. So a person that's going to be with the same company for an extended period of time, where it's anticipated that they're going to be there for an extended period of time, that's an indication that that person is an employee. So permanency is an important factor. Key business activity provided by services. What this means is that if a person is coming in to repair machinery, make deliveries, do something that helps the business run and operate, but is not central to the type of business services that are delivered, that person is not an employee probably. So for example, I use the example of a landscaper. If a landscaper needs bricks to build a retaining wall or paving stones to put around a backyard or something, they hire a delivery service, a truck driver, to deliver that stuff to the work site. And even though those materials are necessary for the landscaper's business, what the person making the delivery does has nothing to do with landscaping. The person is a delivery service. The person is a truck driver. So that individual is not an employee of the landscaping business. That individual is more likely an independent contractor, because they're not providing an essential service. And the services they are providing, they're providing to a lot of different people, not just making deliveries to that one company. So you have to look at the nature of the service that the worker is providing, see if it's really key to or central to the business activity. And if it's not, it is more likely that that person is an independent contractor, not an employee. So if you run down all these factors and you're still not certain whether your worker is an employee or an independent contractor, you can ask the IRS to determine that for you. You can file this Form SS8, it asks for a certain amount of information, and you submit it, and the IRS will make the determination of worker status. They'll come back and tell you whether they think that person is an employee or an independent contractor. The problem is that the IRS says there's a 6-month processing time. I'm told that that's optimistic, that the processing time frequently these days is at least 8 months and sometimes 9. And, that's annoying, but you can live with it. You have to live with it once the IRS makes a determination. You do not want to be in a position where the IRS says your worker is an employee and you're saying, oh, no, my worker is an independent contractor. You will almost always lose that battle. And in the meantime, the amounts that you owe are going to pile up. And when you do ultimately lose that battle, you're going to owe not only the amounts that you should have been paying, but interest and penalties on them too. So can you fight the IRS? You can if you choose to. It's to me, it's like tilting at windmills. It's not worth the effort because you're almost always going to lose. What happens if you lose? The IRS imposes fines and penalties, okay? So remember, we spoke a minute ago about how for Social Security purposes, the employee is contributing 7.5% and the employer is matching that with 7.5%, okay? If you misclassify your worker and the IRS finds out about it, you're going to be liable for all these payments and penalties, okay? So now you've had somebody working for you for 2 or 3 years, 4 years, maybe longer, and it turns out that you should have been contributing the employer's share of Social Security. You're not only going to have to cough up that, you're going to have to pay the employee's share too, because you didn't give the employee the opportunity to have it withheld when it should have been. Same thing for unemployment taxes. In New York State, you're going to wind up paying contributions to unemployment unemployment insurance rather. In addition, there's going to be interest in all those monies that you owed over the years. There may also be civil fines and penalties, and in extreme cases, which requires, not only a finding of intent, but I don't want to say malice because that's overstating it, but it's possible. In other words, if it's an extreme enough case that there are criminal prosecutions. That doesn't happen very often, but it does happen once in a while. So at this point, I want to tell you that you will frequently hear business owners claiming that they don't have any employees. All of their workers are independent contractors. Everybody gets a 1099. And business owners do this and can get away with it for years. And they'll brag about it to anybody that will listen. What will happen, though, is that sooner or later, either an employee gets laid off, I shouldn't say employee, a worker gets laid off, or a worker gets hurt on the job and then goes to file a claim for workers' comp benefits and discovers that they're not covered. This is very, very common in the construction industry, and that's why I'm bringing it up here. It's so common, and the misclassification issue is so prevalent in the construction industry in New York State that there's a section of the labor law that particularly addresses the construction industry. It's called, obviously, the Construction Industry Fair Play Act. And what this law does is it takes that analysis away, the continuum of control and those 3 categories of control that the IRS, it takes that away and creates a presumption that anybody working for a construction industry business is an employee unless the business owner can prove all these things in this list here about the worker. So it really does, it changes the landscape. It puts the onus on the business owner to say, yes, I can legitimately treat this person as an independent contractor because they are free from control and direction. And I have a contract that says it, and our practices don't contradict the contract. I just tell this person what the result is that I need and when I need it by, and then I leave them alone. And they're free to do it on their own. And by the way, that person is not performing essential services like we discussed earlier with the landscaper and the truck driver. And by the way, that person also has their own independently established trade, and they offer their services to the entire market, not just to me. In order to avoid or rebut the presumption in the construction industry that a person is a worker, that a worker is an employee, the business owner has to be able to prove all three of these things. So in the construction industry, you have to be especially careful about classification. And it applies to all businesses in the construction industry, no matter how small they are, okay? As you can see here, the penalties are significant, $2,500 per employee, not per instance, not per company, per employee, $5,000 if it happens again. And every construction industry company has to post a notice about certain rights that are available and the differences between an employee and an independent contractor. And there's a penalty if you don't even put up the notice. Several years after the Construction Industry Fair Play Act was put into place, it was brought to the attention of the legislature that similar problems exist in the trucking industry. Although they weren't satisfied with calling it trucking, they had to talk about drivers of commercial vehicles who transport goods. Yeah, folks, we call them truckers. I don't know why the legislature had to make it so fancy, but in any event, the same problem of misclassification was widespread in the trucking industry. And so what the state did is they enacted this Commercial Goods Transportation Industry Fair Play Act. It is, ladies and gentlemen, it is almost exactly the same word for word as the construction industry law, same penalties, same presumptions, et cetera, et cetera. And so, if you're familiar with the construction industry law, you are also familiar with the transportation law and vice versa. Now, what happens if you just don't make the right filings, okay? In New York State, when you have employees, you are required to not only, withhold all this money, withhold the state and federal income taxes, you are required to then submit it on a quarterly basis to the tax authorities in Albany. And you have to submit it with this form with that long, bulky, uncomfortable name. It is frequently just referred to as the New York State 45 because that's easier, okay? That form has to be submitted every 3 months, I said, with the monies that are owed, okay? If you return that file or submit that form late, there's a penalty, and the penalty is the greater of $1,000 or 50 times the number of employees shown in the last return, okay? Note that once you have employees and you submit one of the, and by the way, ladies and gentlemen, this is frequently done by your bookkeeper or accountant. It's not something you should necessarily have to do on your own, because there are certain categories of withholdings and amounts that have to be kept track of during the quarter. Some of this will be done by your payroll program probably, but you really should have somebody on the finance end of your business also submitting these reports. Excuse me. An odd thing is, and something that frequently gets business owners in trouble, is this. Once you have employees and you are submitting these quarterly reports, if you have a quarter in which you don't make any wage payments, such as we had in the pandemic, there are several quarters where the bars and restaurants were just closed. They weren't paying any money. Gyms too, I think, a couple of other businesses. So they had employees on their payroll up until March of 2020. The state shut them down, and so all of a sudden they weren't paying anybody. And a lot of these business owners stopped filing their reports. The problem is the law says you have to continue to file these quarterly reports, even if you don't make any payments. You have to file what's called a zero return. And although, it's silly, but that's what's required. So any quarter that you have no wages paid, you still have to put in that quarterly report. And that got a lot of business owners in trouble because their finance folks weren't paying attention. Okay, so let's move on to the next classification issue, which is whether or not a worker is entitled to overtime, okay? The terminology here is a little clunky because the people that are entitled to overtime are the non-exempt, and the ones that don't get overtime are exempt because the legislation is written in terms of who is exempt from the overtime regulations. So if you are exempt, you don't get paid overtime. If you are not exempt, you get overtime. Yeah, I don't like it either, but nobody's come up with a better version of it, okay? First and foremost, only employees are entitled to overtime. Independent contractors are not. It's up to the independent contractor to figure out how long it's going to take to complete a job, even approximately, and to calculate their profit margin and the costs accordingly. Now, employees who are salaried are exempt from the overtime rules. And there's a couple of categories of employees that we're going to talk about in a minute who are exempt because they get the same salary from week to week to week to week. It is not dependent on the number of hours that they work, okay? Employees who are paid by the hourly employees are entitled to overtime after 40 hours of work. They are not exempt from the overtime regulations. But here are two important things to know in terms of when the obligation to pay overtime arises. The first is that overtime is based on a 40-hour work week, not an 8-hour day, and also not on a 2-week pay period. It's 40 hours per week. So that, and then, in conjunction with that, vacation days and sick days and holidays are not hours worked, even though your workers are getting paid. It's not about hours paid, it's about hours worked. So where this becomes important is you get one of those 3-day federal holidays. You got, Monday, everybody closed, everybody's off. And one or two of your workers come to you and say, listen, we know you've got a big shipment that you want to get out on Friday. Some of us are willing to put in an extra 2 hours on Tuesday and Wednesday, and maybe Thursday if necessary, to make sure that shipment goes out on time. Great. Thanks for your offer. Terrific. They then come to you at the end of that week and say, we put in those 6 extra hours Monday, Tuesday, Wednesday, and Thursday. So we're going to get 6 hours of overtime, right? Legally, the answer is no, that is not right. Because with the office having been closed on Monday, they haven't hit 40 hours of work yet, okay? And since overtime is based on a 40-hour week, not an 8-hour day, they're not entitled to overtime for those 6 hours. Now, I will warn you, I shouldn't say warn you, I will advise you the way I advise my clients. Even though they're not entitled to overtime, you can consider paying it anyway because you don't want to, you want to incentivize your workers to continue to make offers like that, to go the extra mile to get the work done. So even in that circumstance where you're not obligated to pay the overtime, you might want to pay it anyway. The other thing to think about is also in many cases, your employees are paid on a 2-week pay period. And so the temptation is, in the first period, George was out for 6 hours on Wednesday afternoon because he had to leave early. So in the second week of that period, he worked 5 extra hours, but because he was short 6 the first week, I only owe him no overtime because it comes to a total of 80 hours. Not the way it works, folks. Like I said, the analysis is made on a weekly basis. So if George missed 6 weeks in the first week, but he put in 5 extra hours in the second week, he's still entitled to 5 hours of overtime because it's based on a 40-hour work week, not on the pay period. Okay. Exempt versus non-exempt, okay? Now, before we even talk about the exempt categories and who gets overtime and who doesn't, you must be aware that in New York State, there is a salary threshold before a worker can be exempt from the overtime rules. And here it is. You have to be paying that person at least $58,500 a year before you can claim that they are in one of the categories that means they don't get overtime. That's a weekly salary of $11.25 a week. This threshold, this floor jumped up significantly. I think it was 4 years ago, 3 or 4 years ago. And frankly, ladies and gentlemen, I say this even though most of my clients are business owners, it is at least partly, if not largely, the fault of business owners and their advocacy organizations that had pushed back against raising that floor for many, many years. Prior to the $58,000, I think it was only like $28,000 a year, which, in this day and age, $28,000 is not a lot of money. And to deny a person who was making $29,000 to $30,000 a year overtime was considered very, very unfair. I think it was unrealistic in a state like New York, where expenses are so high. And as a result, when the threshold did get changed, it got changed by a lot. So even if you have professional employees, an employee who meets the administrative exemption, et cetera, If that person is not being paid at least $11.25 a week, you cannot exempt them from the overtime rules. Very important. Okay. What's an administrative employee? Administrative employee has to meet both of these tests, okay? A person whose primary duty consists of the performance of work directly related to management policies, and a person who regularly exercises discretion and independent judgment. The administrative employee, in other words, ladies and gentlemen, is not the person that runs the office, gets the office supplies, maybe pays some of the bills and stuff like that. It has to be a person who exercises discretion. Frequently, that area of discretion is in hiring, firing, sometimes in promotion. It is a person who will decide who's going to supply the company that's going to supply the office supplies and the coffee, et cetera, not the person who, puts it into the closet. There has to be a certain amount of weight given to the person who is going to be fitting into the administrative employee exception, weight to their decisions, weight to their input on policy matters, okay? That person has to have some input into high-level policy matters, and that person has to regularly and directly assist an employee who is in a bona fide executive or high-level capacity, president, CEO, et cetera, but not just doing administrative or secretarial work, work directly related to management policies. The professional employee exemption, I think, pretty much speaks for itself. A bona fide professional capacity, you can name most of them yourself: doctors, lawyers, architects, landscape engineers, any kind of an engineer almost. It is a person who has advanced knowledge, usually acquired by a prolonged course of study, law school, med school, architecture school, et cetera. Or, and this is one that is frequently overlooked, is original and creative in a recognized field of artistic endeavor. In other words, actors, musicians, and other persons in the performing arts, okay? They are considered professionals, even though they are not licensed by the state of New York. So anybody that's got that professional license is exempt from the overtime rules. Now, the executive employee is also exempt. The executive employee is a person whose primary duty consists of managing the enterprise. And managing means directing the work of at least two people and usually more. The executive employee must have authority to hire and fire. And so sometimes where you see the exemptions working is the executive employee makes the ultimate call about who gets hired or fired, depending in part on the input from the administrative employee. So the administrative employee may be the person who's conducting interviews and reviewing resumes, et cetera, checking references, and, screening, if you've got a dozen applicants or 20 or 30, the administrative employee may be the person who is doing all that legwork with the object of narrowing the field down to 3 or 5 or 6 potential candidates, and then making a recommendation to the executive employee. And that's where that, kind of intersection is, and where both of those employees wind up being exempt from the overtime rules, okay? The executive employee obviously also regularly exercises discretionary powers. It is the president or the CEO who decides, for example, which commercial lease you're going to sign. So, the location of the business, how much money the company is going to borrow, what ratio of debt to income, et cetera, the big stuff. So, the executive employees and the professional employees, generally not much question about whether they are exempt based on the work that they do. But also remember that there's that salary threshold requirement. Because that's one of the categories of employees that is exempt from the overtime rules. But there's a distinction between the outside salesperson and the person that comes in working from a list and just makes cold calls from the office. The person making those cold calls is not exempt. The person who spends most of their time away from the office making sales and getting orders and building customer relationships, et cetera, that person is exempt. That is probably largely a holdover from days past. when it was just too difficult to keep track of those hours. But anyway, that is still the law, okay? And a salesperson that is customarily and regularly engaged away from the place of business, away from the office. I love this cartoon. It just makes me laugh. Imagine having to lug around a sample of bricks. But that's the outside salesperson exemption. So in other words, Donald, shortly spoken, if the person is away from the office making their sales, you probably don't have to pay them overtime. The last exemption from the overtime rules is the computer employee exemption. This includes system analysts, programmers, software engineers, etc. Excuse me. These are governed by the Fair Labor Standards Act, which is a federal law, but New York State has pretty much the same provisions. The fee for this one, I shouldn't say the fee, the baseline compensation for this one is a little bit different, though. This amounts to a minimum threshold of $455 a week, which, as you know, you can see compared to $1125 is pretty different, okay? But the employee has to be employed as an analyst, programmer, et cetera, et cetera. You can't have somebody that just functions as your IT person and then claim the computer employee exemption. It has to be their job, not just one of the additional things they do. I have several clients in the next generation, my daughter's age and more or less, who wind up helping the old guys like me adapt to the technology. And sometimes they wind up doing it on a regular basis, but that's not what their real job is. That's just an extra annoying thing they have to do. And so they are not eligible for the computer employee exemption because they are not analysts or programmers or software designers, et cetera, et cetera. It has to be their main contribution. Now, I have revised this presentation recently, and I hate to do this because it's going to unsettle things a little bit, but I feel it's my obligation to keep you informed about what the current landscape is. And the current landscape is in the process of changing, okay? We had in May of 2021, a new rule from the Department of Labor clarifying the test that was going to be used to make this distinction between employee and independent contractor. And this Department of Labor, because it was the Trump administration commissioners, identified a rule that was going to be finalized as of May 7th, and identified the two core factors that are most probative. Probative is just a legal term meaning most important, most convincing to the analysis, okay? And under that rule, it was the nature and degree of control over the work and the opportunity for profit and loss. The profit and loss analysis was very important, and as envisioned by that rule, was going to go a long way to distinguish between the employee and the independent contractor. This rule was widely considered to be more favorable to business owners because it was going to allow for the classification of more people as independent contractors so that business owners could get away from all that expensive administrative headaches by being able to classify more people as independent contractors. However, President Biden's Department of Labor has revoked that rule and has proposed to revoke that rule and instead use something called the ABC test. Now, I'm going to come back to this slide in a second, but let's talk about what the ABC test is. This is another one of those tests where the worker is presumed to be an employee. So now President Biden's Department of Labor is proposing that this be the federal rule. And if that is the case, it would displace all the state rules, okay? So there's this presumption again that the worker is an employee unless the business owner can prove these three things. And it is very much a kind of check the box analysis. You have to be able to prove all these three things in order to claim that this worker is really an independent contractor. It is widely perceived to be less favorable to business owners and very widely perceived to be a rule that will result in a lot more people being classified as employees. It is so widely perceived that way that when the Federal Department of Labor hosted a workers' forum recently online, an event that I watched for a little bit of over an hour, it was an invitation for workers to come online and express their opinion about this new proposed rule. What happened is a parade, ladies and gentlemen, of independent contractors, people who had their own business and were pretty happy about that, got on to complain about this new DOL rule. Now, I don't feel one way or another about it. I don't have any strong feelings about this. Frankly, I think the details are, the details of which test you use are not different enough that it makes a huge difference. The big thing that's involved here is this presumption that a person is an employee. And there are legions of independent contractors that don't like that presumption. They say that with that presumption in place, they're going to lose opportunities to work because employers are going to be reluctant to hire them as independent contractors because they can't rebut the presumption. They're stuck with employees. And so many independent contractors think that this rule is a bad idea. It's going to make it harder for businesses to hire them. I don't know if that's true or not. I think it's too early to tell, but it's something you should be aware of, because if it does go into place, it is going to change the landscape a little bit. We're going to wind up with this presumption, and that's different from what is existing now. And so, I will keep an eye on it. I will keep the SBDC and my other government agencies I work with informed, but be aware that the rules may change. So here's the ABC test. Leslie and Will, I'm assuming that you're going to be distributing a copy of the PowerPoint deck when we're done. Is that correct?
If you'll allow us to do so, yes, that would be wonderful. We always record the Zooms and as Willa said, post them on our website and people can see it that way. But if you will distribute the PowerPoint, that would be fantastic.
I'll get it to you, maybe not today, but by tomorrow. So that
excellent. Thank you so much.
Because I'd like people to have this ABC test, to be able to refer to it, so that when the discussion comes up, they can at least see what the ABC test is. And it's kind of a derogatory term, ABC, because people who are opposed to it say, it's going to reduce this complex analysis to something as simple as ABCs. Prove this, prove this, prove this. Oh, boom, you've got an employee or an independent contractor. It's not that simple, but that's what it's going to be referred to. So, ladies and gentlemen, if you have questions, I'm not the kind of lawyer that starts the clock as soon as I get the phone call. I don't mind, excuse me, I don't mind 5 or 10 minutes on the phone to clarify something that I've said, just to repeat it if I've said it too quickly. You have my phone number. You can shoot me an email if you prefer. I really enjoy working with the SBDCs, and so I don't want anybody to walk away from this thinking that they didn't get all the information that they needed or they couldn't get a clarification. Please don't hesitate to contact me.